Yeah, hi folks. The correction that I've been looking for in the US market, I think, is very, very close if it hasn't started already. So I just wanted to do this quick market update. As I said, the signs are that the US market really is pretty close to rolling over. But I would hasten to add that I expect this will probably only be a fairly mild correction. I think we're into a pretty good period that will probably extend through to maybe May. So maybe only looking for 3 to 6% on the downside, and looking for that'd take us down to probably about 1290. A more shallow correction, perhaps 1320, but 1290 is probably the area that I think we could really start to buy with confidence. The signs that I'm seeing are we're seeing smaller range days on the S&P. We're seeing more closes near the low of the day, and it's just so overbought on so many momentum indicators and so many contrarian indicators that it's not funny. And markets don't just keep going up in a straight line. They do have to correct from time to time, and it's obviously a pretty healthy thing as well. We're seeing the VIX index, the fear index, starting to show signs that it's turning up. There's a couple of other leading indicators that I look at. One of them is the Dow Jones Transportation Index, which is quite often a leading indicator of market tops. You can see this is on a weekly chart. The transportation index has started to turn over. You can see the MACD's really rolled over now, and this is the third week down in a row. And I think that's a pretty good leading indicator of where the market may be going. We're also seeing the banking index is substantially above the moving averages, and all prices revert to the mean. That's just a law of the market. So I think this banking index is looking like it's running out of momentum as well. You can see the MACD really quite extended, looking like it's just about to kind of roll over. So, I'm seeing that across the board. There are just so many extended prices that we've got to get some sort of pullback. So now it comes to the impact on our market, and especially the small caps that we're all punting like crazy. My view is, as long as commodities hold up, and I think they will, I think we're going to be in pretty good shape as far as the small caps go. If you look overnight, gold and silver were strong and appear to have bottomed out to me and heading up. This is the gold chart on a daily, so you can see the last 3 days on gold have been pretty strong. Silver not so much yet, but I think it will follow once it manages to break clear of this $35 mark. Oil was up again. Copper is holding steady, close to $4. So the signs around the commodities are pretty good. And the other thing that I like is that the gold and silver have gone up the last couple of nights while the US dollar's essentially been flat. So it's not a currency impact. It's they're moving in their own right. So the bottom line for me is I believe we're in just a fabulous period for small cap trading, but it is going to get volatile. It's always a bit unpredictable how the small caps get treated when the major indices start to roll over. And so just take care with the entries, wait for the market to come to you, and take partial profits regularly. So yeah, just thought I'd give you that update. Hope it helps. Cheers.